Well, good morning, traders and investors. My name is Roger Scott. Today is Friday, the 16th of October. I made a mistake yesterday. I said it was the 14th, but it was actually the 15th. Mea culpa, my fault. What can I do? Let's move on. All right. Today I want to talk about the broad market. I want to talk to you about the percentage of stocks above the 50-day average, the moving average for both the NASDAQ and the S&P to show you that momentum levels are beginning to cool off. And then I'll show you the sectors that are in danger zone and sectors that are completely shrugging off the danger zone. And if you're really good, I may even show you a really good pullback stock. So what do I always say? Let's get into it right now. Starting with the global economy, and in terms of reports, we've got a couple of really big reports today. Let me show you what we've got. And we've got retail sales at 8:30. And we've got industrial production. Now, it's only 8:19. I don't know if we'll get to this report. I'll try. But in terms of the sentiment, I want to show you something. Look at the consensus. Literally from 0 to 2.3% retail sales. Ex autos, 0.1 to 1.6. These are some interesting numbers. I want to see the consensus number go above August's number, okay? It's been stalling right around 0.6, 0.7. I want to see if we can go above that number. We'll see that number over the next 11 or 12 minutes maybe. Later on, we've got consumer sentiment and industrial productions. These three reports, retail sale, industrial production, and consumer sentiment, are going to give us a very good indication of whether the economy is heating up or cooling off from a fundamental perspective. And it's really important because from a technical perspective, well, you'll see in a minute. So now in light of that, let's talk about global economy. Sorry, I'm jumping back and forth, but that's why you have the rewind button. And I've got a lot to talk about. So I'm actually analyzing the market for my own benefit. And you guys are just part of it, kind of looking over my shoulder. So that's one of the reasons why I kind of go back and forth, back and forth. If you watch me for some time, you'll get a good understanding of it. Global shares were mixed Friday. Investors weighted concerns about presidential election and the stimulus package, and COVID-19. Between February and September, it was COVID-19 and stimulus. Now it's COVID-19 stimulus and the presidential election. There's just too much unforeseeability in the market for large hedge funds to make big moves right now, in my opinion. Looking ahead, markets are waiting for Chinese data next week and for the big data this week from US, which is coming out very shortly. Markets have turned very cautious. I'm expecting that to continue. And co-influence of worrisome trends amid the pandemic, which I'm expecting to continue seeing. COVID infections are rising in Europe, prompting governments in France as well as Britain, folks, to impose new measures to contain the outbreak. Fortunately, we don't have a lot of exports coming from France and Britain. Thank God. We got a lot of exports coming from China. And so far, China's looking better, and that's really helping U.S. If China folds right now, that's going to be a big impact on the economy, in my opinion, again. Meanwhile, campaign theatrics continue with the latest question whether the debate scheduled next week between Trump and Biden will go ahead as planned. The clash planned for this week was called off by Trump. COVID-19, although I got to say, he bounced back than most 30-year-olds. Biden said he plans to participate in next week's debate, but intends to ask Trump to take COVID-19 before arriving. I think that's fair enough, right? I mean, why would he want to get infected? Investors are also watching. But then again, if they're on a different part of the stage, but no mask, I guess it can go either way. And he's not a young guy. He's 78, 79 years old. It could be a plan for Trump to infect him so he gets COVID and doesn't get... I'm being awful. I'm sorry. I'm just talking. I'm just trying to be funny here. So investors are watching for earning reports, which are not, earnings right now are not having as big of an impact. We're seeing bank stocks. They're all over the place. As I told you, investment banks are doing really, really well. Regular banks are not. So that's a big problem because they don't have that investment arm for stock investing, which has become really, really hot right now. Rising COVID-19 cases may bring more social distancing restrictions, which is why I am big on stay-at-home stocks, outdoor stocks, things that encourage staying away from others, isolated activities. And you can do a lot of active outdoor activities isolated. You can go for a walk, you can go for a run, you can go for a hike. So outdoor shoes and outdoor sporting accessories are really hot right now. So again, we're waiting to see the how bad it's going to get. And Bill Gates and other very, very smart people believe that the fall is actually going to be worse than last year. We'll wait and see. At least we've got some vaccines on the way. Hopefully the election will be out of the way. And again, crude oil, we're still just a dollar or so below the price that U.S. frackers pay for a barrel of crude oil before they start working with it. So don't hold your breath and expect crude oil to be a major, major riser. Now, in light of this lukewarm report, nothing really hot is going on. I want you guys to look at momentum levels. This is the S&P 500 on a weekly basis. Usually I look at monthly, but this is a 5-year. And 5 years. What happens last 5 years? Every time we move here, we move lower. But look at what happened this time. If you look at the trend line, let me go to the trend line. Look at this trend. Every time we go high, we break lower. Every time we go, now we went to 96% of stocks in the S&P, those 500 stocks, 96% of them were trading above the 50-day moving average. We cooled off pretty well. We went to the 45th percentile. Then we went to the 82nd percentile. Now we look like we peaked out at 80th percentile. The bottom line is long-term momentum lines are weakening. The highs are getting lower, which means it's harder for the S&P 500 to stay above the 50-day moving average as we go higher, which means momentum levels are declining. That's not a bullish sign for the stock market. That's big, number one. Now, look at the NASDAQ 100. Do you see anything different? Not really. Let me just draw this for you. Look at that. See that? Highs are looking lower. I drew this all the way back in May, I believe, and I told you it would go lower. And momentum levels, every time they peak out, their highs seem to go lower, lower. Over here, it went a little higher. But bottom line is, on a long-term basis, as you could see here, they're moving lower. And we need for them to move really, really low and balance this market out. Until they do, stocks are going to have a problem making all-time highs. Let me show you specifically what I'm talking about. This is the S&P 500. Let's look at it on a daily basis. Notice the high we made September 2nd. We haven't been able to overcome it. We tried right here. We haven't been able to do it. Momentum, and momentum levels. Let's look at the NASDAQ now. Same thing with the NASDAQ 100. We make a high right here, and we can't go higher. Very similar to what we're seeing with momentum lines. So even when the markets are making swing highs, the number of stocks trading above the 50-day moving average continues to trade lower. And the same thing on the NASDAQ. All right, you saw it right here. Right there. Let me just change that for you. See that? Momentum levels are declining. Now, we've got election. We've got COVID. There's a lot of stuff going on. So my suggestion is if you are going to buy into something, make sure it took out that September 2nd high. Let me show you the 10 major sectors. So here we have financials. Did financials do it? Let's see, September 2nd. Nope, lower high. How about energy sector? Not even close. This is a bear. How about industrial stocks? Yes, they did. Here's September 2nd. They did it twice. They matched it, and then they took it out higher, and it's still higher. So industrial stocks, I like. How about utility stocks? I like utility stocks. They are way higher, way higher than September 2nd. They're defensive, but they're higher. These two sectors are defensive. That means they usually rally when stocks cool off, like we're seeing on momentum levels right here. Let's continue. Consumer staples? Nope, almost, but nope, higher high than here. How about technology? Nope, not even close. How about healthcare? Let's see. Nope, almost, but not quite. How about materials? Almost, but not quite. How about real estate? Almost, but not quite. Consumer discretionary did. So we've got three sectors. We've got industrial stocks, we've got utility stocks, and we've got consumer discretionary stocks. Those are the three sectors that were able to overcome the current September 2nd high. And those are the only two sectors you should be looking at. All right. Now, let me show you some stocks that are pulling back right now. Canada Goose Holdings. Not sure about that, but here's one thing. Columbia Sportswear. Hey, it's a consumer discretionary stock. That's right, Comb. And it's an active sportswear. Remember what I said about active wear? People are spending time exercising. Peloton is making new highs, so forth and so forth. Comb. There's a stock for you right here. Century Communication. Here's another one for you right here. All right. And here's Travelers of America. So three stocks that I'm liking. Comb, Columbia Sportswear, CCS, Century Communication, and Travel Center of America. Three stocks, TA, CCS, and Columbia Sportswear. Now, folks, I know it's Friday, and I know you're ready for the weekend, but I've got something really, really big and exciting for you. One of the greatest technological revolutions since the internet, it's finally here. Legendary insider James West is about to expose it for your benefit. Your benefit. And James West knows his stuff cold. It's a $15 trillion technology that could change the way we drive, connect to the internet, and so much more. And I mean so much more. By January 2021, when this technology network is switched on, those who get in early on stocks in this sector will see potential gains of 468%, 522%. How about 712% per trade? Let's review. Revolutionary technology, most revolutionary since the internet. James West, you guys know how much I love James West. We talk all the time. $15 trillion technology, 15 trillion, change how we drive, connect to the internet. Basically, from what I'm understanding and reading between the lines, this is a game changer. And he's saying by January 2021, this technology is switched on. We could see trades that are going to skyrocket 468%, 522, 712%. You can't afford to miss out on that. Click on the link below to see how you can ride this revolution to riches. Do it now and have an amazing weekend. Bye, guys.